Good morning, everybody. This is Free the Trade. I am DK305007, and we have a lot to cover today, just like usual. I think we should just jump straight into the charts. We've got a lot going on in the market, as you may know. There are lots going on a geopolitical level. We have tariffs that went into effect last week. Actually, they went into effect over the weekend. They were released last week. They began collecting payments on them this weekend, and we are starting to see the effects of some of those tariffs coming into this week. So we are going to touch up on tariffs again. I know it's something that I personally am tired of talking about and tired of hearing about, but I do think it's important to kind of stay up to date on the latest news, just so we know what's going on and we know how to handle, how to work around kind of what's going on in the political. If you're just getting started with us, we do have a Discord. It is posted in the chat. We do live streams Mondays and Fridays, and if you're here, we would love for you to give us a thumbs up and subscribe for more content throughout the week. Let's jump straight into kind of where we're at today. Alrighty. First of all, we've got our morning news. Everything is about tariffs today. Trump tariff updates. POTUS digs in as markets sink. More tariffs. Everywhere we look, tariff news. If you're not familiar with what's going on with those tariffs, Donald Trump, our current president, did do what was called reciprocal tariffs on pretty much any nation that the United States trades with, including 2 uninhabited islands. Basically, he is trying to get a net zero trade amount with these foreign countries. Yeah, and that's kind of it there. The market did react badly to these tariffs going into effect, and has continued to dip quite a whole lot. Today, our futures gapped overnight. If we look here, they're down 2.50% so far, which is actually better than what they were last night. They were at 4,970, I believe, last night. Yeah, even dropping so far as to go down to 4,700, which is extremely low. But we are starting to recover, which actually might mean that we dip hard and then have a slight recovery in stock market too. So a lot of things to watch out for as market opens. Personally, although I do not give out trade recommendations on this channel, I would caution to potentially hold off 15 minutes today, let things settle. The first initial push is going to be extremely volatile. We don't know if it's going to be up because we may have fallen too far. We don't know if it's going to be down further because we haven't fallen far enough. But we want to make sure that whatever happens, we are trading effectively, we're trading safely, and we're not putting ourselves into more risk than what we should be comfortable with. All right. I'm just going to go through some of these news stories. Just kind of what I'm doing here is I'm learning for myself. I'm getting some information that I want to use to make decisions about the market today, such as if we're going to trade. Once we decide that, we might decide what we're going to trade and also the trend and the direction that we're going to trade. Wow, oil tumbling 3% lower, having tumbled 4% overnight to below $60 a barrel for the first time since 2021. I don't know if the significance of this just seems very, very understated. It's just one small sentence. But yeah, oil hasn't been below $60 since 2021. I think the reason for this is even during COVID-19, we were dealing with, we had our reserves had been partially emptied, and so we were replenishing those reserves. I'm assuming we've made some progress on that. We've also opened up additional rigs. I know the not AEU. Oh, what are they called? Basically, the Saudi countries have increased production as well. So there's an increase of supply. The demand for it probably hasn't increased as much. And I know energy demand for oil is actually declining slowly. Not a whole lot, but slowly, year over year, it is declining. And so I assume that with that increase in supply, as well as the decreasing year over year demand, we are having a surplus of oil, which is driving those oil prices down. Something that could potentially happen because of that is we could see United States oil rigs shutting down or stop producing, maybe some layoffs there. That's not good news. But that is a potential outcome of really low oil prices. I don't know what the break even on it is. I don't know if it's $50, $60, $80. I'd have to do some research into that, but that is something to consider. Ladies and gentlemen, thank you for joining us. If you're just here and you're not part of our Discord, go ahead and click the link in the chat today. It's pinned. We'd love to have you join our Discord. A lot of good information there, a lot of like-minded investors, and we are exploring and doing things together, equipped with a lot of awesome resources from Free the Trade, such as screeners, tutorials, explanations of indicators, and more. All right. Tesla, Nvidia leading Magnificent Seven losses. Man, Tesla, guys, has taken quite a hit. I was actually so surprised to see Tesla down in the double digits. Yeah. At one point, I think it was trading at $87 or something like that. $83.93 is its low, according to the one-day chart. Looking at this chart, we can see, an 83.75, which is that's just astounding to me. With AI and such becoming such a new industry, Nvidia dropping like that is incredible. But I think it goes to show the fear, which looking at the index is sitting at 4 today. It goes to show the fear. It goes to show the uncertainty in the market. And it also goes to show something that we haven't talked about, and that is a market reset. These tariffs, now that we have actual numbers, we are going to have to price into products. It's going to change the costs of things if they stay long term. And if it changes the costs of things, then it changes gross margins on companies as well. And so, for instance, if Nvidia is making, 90% gross margins, which I don't know their actual gross margins, I'm just using this as an example. They're making 90% gross margin, and then they have to deal with 50% tariffs. Their gross margins shrink to 40%. And then because of that, their revenue decreases and their profitability decreases. And then all of these fundamentals have to follow to change to those outlooks. So maybe instead of earnings per share of $2.94, they're making earnings per share of $1.94 or 0.95, depending on how badly they're affected by these tariffs if they stay long term. So if the EPS changes, if that PE ratio changes, then maybe we have a company that is currently trading at like 90% the PE ratio that it should be based on the new data we have from the tariffs, and we could potentially see a lot of these companies here trading at way lower numbers. So maybe Nvidia is now a $100 value company rather than a $170 or $150 company. Maybe Nike is now $30 or $50 company rather than a $100 company. Maybe Amazon or maybe Apple is now an $80 company rather than a $150 company. These are things that we don't know, and we'll have to let earnings tell the tale, along with the actual realized new gross margins and things. So there's a lot going on in the market, and because of all the uncertainty, because of all the different things coming up, we're going to have to wait for all the fundamentals of the market to reset, which could take between I'll just be honest, it could take up to a year just to get a real outline of kind of where we are to be able to make accurate models and stuff. So we're in a very, very uncertain, very, very hard to trade time. So I do want to talk about how we can be effective in our trading during this time. It's probably safe to say that we've entered a bear market. We have had continual downturns in the market. Let's find SPY here, or actually let's go to the SPX. We are not in recession yet. For those who don't know, a recession is actually an official term, and basically it means that for 2 quarters the United States has had a decrease in GDP quarter over quarter. So we've only been through 1 quarter where we've had that initial decrease. We have another quarter that we have to make it through before we can be considered in a recession. That is something to consider once we are considered officially in a recession. If that happens, there's a lot of things that'll go with there. Maybe long stocks suddenly become something that you sell off most of. You find low beta equities, which, if you don't know what the Greek beta is, basically it is a number that illustrates how a stock moves in relation or in comparison to the rest of the market. So for instance, if the SPX index drops 5%, how far does this stock drop? Does it drop 1%? Does it drop, which would be like 1/5 of the move of SPY, or does it have a 10 beta where it drops 10 times the move of, say, the SPX index? And so low beta stocks, low beta options are going to be the absolute friend of the long-term investor. Dollar cost averaging in, or DCAing, is going to be a really, really helpful thing. DCAing basically smooths out the peaks and it smooths out the valleys as well. Also allows you to buy in through periods of uncertainty and sell-offs without, say, dropping $1,000 or $10,000, whatever your investment is, in one lump sum and hoping for the best. You can maybe do $5 a day or $5 a week over a certain period until that full amount is invested into the market. Trading's going to be difficult. A lot of people tend to assume that if we enter a bear market, that we have it's the opposite of a bull market, but it's not the opposite of a bull market. A bull market is when we have long runs, short downsides, generally forward upward momentum. A bear market, we tend to have, you would think a bear market would have downward momentum, strong downward, but actually this strong downward momentum that we're seeing is very, very uncharacteristic of a bear market. It might be more characteristic of a flash crash or a stock market crash. But a bear market generally is going to trade back and forth just between tight levels. It's very, very unpredictable. it's very, very volatile, and it just bounces back and forth without a clear trend, and that's generally what to expect during a bear market. So day trading can sometimes be very difficult, and you want to make sure you have tight stop losses and you're taking profits extra early. All right, let's move on from that. Volume is now an indicator. That's actually very interesting. That's a cool feature. A new update to Robinhood Legend. I'm actually going to change some things up here. Let's see. Okay. All right, so we are going to need to add volume. Okay, and then we're also going to add in a 50 SMA. Well, maybe it's just an SMA. Okay. Now I am going to go to the 1-day chart. Okay, let me explain to you guys this. Actually, let me remove all the drawings. Okay, let me explain to you this right here. You can use a 50 SMA on a daily chart where each candle is represented by a day to kind of determine an overall trend for the market. Here in February, we entered a downward trend. We broke through the 50 SMA, and we have consistently stayed below that 50 SMA price, bouncing off of it a couple times over here, breaking above it one time, and then driving hard and down and away from that 50 SMA. We are currently here. When we're below the 50 SMA on the daily chart or the daily candles, we can generally assume that the overall trend is downward. Okay, so we may have some green days, but if you look, most of these candles are going to be red days. And since each of these candles represents an entire market day, we can use it to kind of analyze and see if we're in a bear market, if we're in a bull market. So for all intents and purposes, we are now in a bear market. We have been for a little bit. We assumed we were going to break through around here. It ended up just being a push back up and a correction, and then another drop. So here's where we're at. Maybe we have these three indicators here. Maybe we would have pushed through had tariffs not turned out so bad. But because tariffs did turn out as bad as they have, and we haven't seen the full impact of them, we did continue downward. So right now, we don't know where the bottom is. There's no real indication of how far we could go at this point. A lot of news coming in about countries reaching back out to renegotiate tariffs. Other news coming in about retaliation and China, barring trade, adding more additional tariffs, and refusing to trade other certain products that the United States would need to be a manufacturer or a competitive manufacturer in the global economies. So a lot of things going on there. Personally, I don't know that we can correctly model and calculate for the bottom right now. Before tariffs, I think we could have. Now that these have been realized and stuff, and I've done some more research, I personally don't think that we can call where we're going to hit at. We do know we have historical levels of support. We're about at one right now. Around 510 was our last real major one. We pushed through it. We've got another one down here at like 490 or so. This is going to be a big one. If we push through this, I don't know where our next major level of support is going to be. It might not be to like 410. if we push through this strong level of support here, we're gonna have a slight support there, but our biggest support is gonna be at like 410, which is not good news. 410 is the market we were trading at in 2023, and again in 22, and we haven't seen those levels since yeah, 2021 was the first time we saw those levels. So yeah, not a lot of good news for the market. I wish there was better news for the market, but there's not. That's kind of where we're at. I do want to discuss some trading styles. I've done some research into I've done some research into my trading strategy, and I'm going to be changing a couple things personally how I trade to kind of stay competitive and make sure that I have an edge and make sure that I'm staying profitable just in my normal trading. So we'll talk about that in a little bit, though. I'm going to add volume to this chart real quick. Okay. Boom. And it's going to be very interesting to see what happens here. Once again, we're at a 490 level. We have broken through to 480, but that was in pre-market. Or after hours, sorry. It's going to be super important to see what happens once market opens. That's kind of leading up into the market. I mean, we've kind of covered the news. We've covered this right here. We are in an extremely deep, fearful market. We are in a bear market now. We're heading towards a recession. We've got one. I think we've got one quarter down. If we have another decreasing quarter, we could potentially be considered in a recession. Once the news starts reporting that, it's actually going to make it worse, I assume, as more fear will come into play, and there will be less buying in the stock market, which will create a more volatile. Which it's hard to believe that something could be more volatile, but we've had it really, really good for the last few years, and yeah, now we have this to deal with. So we're gonna get through it, though. We're gonna stay smart. Some people may stop investing because of this. Things like this come around every once in a while, and it's just it goes with the territory, I guess you could say. All right, it is 6 minutes until market open. Do we have any questions in the chat? Comments, concerns? Let's talk about things. Whole lot going on. It's kind of a crazy world. Crazy time to be alive. Crazy time to be trading too. Let's see what else is in the news here while we're waiting for that response. Dow futures sink 1,000 points. S&P 500 could open Monday in a bear market. Really, really sad things. That's okay. All right. Let's see what else we've got going on here. If a bear market means a bit more ranged and sideways, would a really wide iron condor work theoretically? Yes, it could. Another thing would be, potentially doing vertical credit calls, or not calls, credit spreads, vertical credit spreads. Because you can go back. Well, let's take a look. You can go out to, let me see. We're going to do, probably need to have about 30 strikes to be able to see this. No, maybe even 50 strikes. We're going to be able to do something like this. How do we do this? Okay. I'm making a mess of things over here. Bear with me. Okay. Okay. You're going to be able to go out really far with some stuff. Things like these calls here. You could do a call credit spread of, say, like 506 and 507. Let's open this up in option strat, actually. I think it's going to be an easier visual for me to try to explain. These credit spreads, things like bear call spreads, are going to be probably our big friend here. Currently trading at 506. Let's, what did we say? Do a 508. Okay, so okay, this is a 5-point vertical call or bear credit spread, call credit spread, and this would make us $263, and it would require $237 of collateral. Okay, this is a, well, let's make it a 1-day trade. That cuts it down to $236.50 and $263.50 for collateral. Break even at 510.37, currently trading at 505.54. Things like this I think are going to be super important. We may even have to go out farther, things like 10 and 15 delta. I probably wouldn't go much farther than 10 or 15 delta, but you're gonna want to trade things like that. That's gonna be more profitable during a time like this than I think trying to do calls and spreads, which means if you have level 1 and level 2 options, you may want to get level 3 options so that you can do some of these more advanced strategies. And really all that changes with these strategies is you want to go farther out. That could be farther out as in more days out, and then also farther out as in a lower delta. This actually is a really good segue into talking about some of my new rules for this type of market. In this type of market, there's 3 main trades that I'll be doing, probably. Those are iron condors, bear call spreads, which are these credit spreads, and then bull put spreads. Probably won't be doing many of the bull put spreads, to be honest. The iron condors are probably the only place where I'll be making a bull put spread, because an iron condor is a bear call spread or a call credit spread on the right, and a put credit spread on the left. So something like buy and sell on this side, and then on the other side, this right here would be an iron condor. Okay, so we're selling on this side, selling on this side, buying and buying on the outer limits. We have defined risk and we have defined profit, max profit. And we're probably going to be doing these iron condors. If we have a trend for the day, then we might do like a vertical spread, like say a call credit spread, and not have this other leg over here. If we don't have a trend for the day and it looks like it's trading back and forth by itself, we're going to put these into place really, really wide, maybe like a 5 point. Same thing over here, really wide, 5 points. And just hope for the best. We could even skew this. If we're in a bear market, we can skew it towards the downside. That way SPY has a lot of downward room to move. And not so much as much, and maybe not as much upward room to move. It is going to require more capital, more collateral up front, 330, and we are going to make less, 170. But it is going to be safer in the long run, I believe. That goes into my stop loss rules. My stop loss rules are going to be 100 to 120% of the credit received. We receive this amount up front in full. We will put a stop loss for 100 or 1.7 for this spread. Could also do like 1.75. But basically that means that all we're really losing is commissions and then the initial upfront amount. We aren't going to lose as much of the max loss. We're going to try to limit that. Additionally, we probably will not be trading up to 100% profit. We're going to take profits around 60%, and we will probably not hold to expiration ever. Furthermore, we may not even trade SPY anymore. And I know a lot of you are like, what? Oh no, how can we not trade SPY? The reason being is SPY has a feature built in that means it's an American style option and you can be assigned before expiration. What we'll be doing instead is trading European style options, which cannot be assigned before expiration. That would include things like SPX, which is the index that SPY tracks, or if you want a smaller account thing, that would be the XSP, which is the mini S&P 500 index, and is basically like the European style baby brother to the SPX. It's I believe it's 1/10 of the SPX index. So here's kind of how that would differ. If you have a larger account, usually probably at minimum 1,000, but usually probably 5,000 to trade this, you could do some of these same strategies on the SPX index, potentially make more money while doing that. You would definitely want your spreads to be wider, way wider. But yeah, I think that's kind of what my new strategy is going to be for this market, is that I'll be trading condors, vertical spreads, and hoping for the best, really. Taking profits early, around 60%, and cutting those losers off at about the amount that I can, the credit amount. So that's the strategy for me. Market is now open. Let's jump in. We've talked 5 minutes of the market down. When we started this, I said we should wait probably 15 minutes. I still think that's the wisest thing to do. Let that first 15-minute candle hit, and then we'll go from there, because I do think we're going to have a lot of volatility. Any other questions? Good question, Roger. Bear market could potentially mean spreads and iron condors. I would recommend doing them about like a 20 delta. So selling the 20 delta, and then, honestly, even the 15 or the 16 delta, going out a little bit, selling that, and then choosing how wide your strikes are going to be based on the size of your account and the appropriate risk breakdown for your account. So, for instance, if you had $100 account, or I'm sorry, $1,000 account, you only want to risk approximately 1 to 5% of that account, which would be, I'm actually drawing a blank. I'm going to just do the math and give you the number. I'm not even going to try to think. I'm exhausted. I've chased a 2-year-old all week, so it's tiring. I don't have any children, so I'm not used to it. So definitely has given me a run for my money. So let's see, times 0.01, so that'd be $10 for the 1%, and then for the 5%, $50. And if you set those credits, or if you set your stop loss at 100% loss of the credit, that should maintain a consistent ability to be profitable without losing too much of that premium. Especially if you're setting your credit spreads and the Iron Condor legs out far enough. Any questions about that? I am considering releasing an article that outlines this new strategy. We'll have to wait until that's done. It's not something that we've done yet, but we are intending to do it later. So be on the lookout for that. We'll probably post it in the Discord. If you're not in the Discord, definitely consider clicking the link in the pinned message, joining our Discord for open access to investors, Frank, myself, others who are always putting new news articles and new findings, or asking questions in the Discord. It is free. We do not charge for the Discord. We don't charge for anything here. And it can be a lot of good morning. In my case, I can't trade European ETFs. So is it okay if I'm still with SPY? You can. Just be more aware that there is assignment risk with SPY. And I would probably still not hold them to 100% expiration. You say you cannot trade the European style options. I do know that Robinhood allows option trading on XSP. At least I believe they do. Let's actually look. I want to confirm this. XSP. So if you use the Robinhood platform, boom, you should have access to it. And with that, you should have access to, yes. So yeah, those of you who are in Robinhood, because they just recently added indexes, you should be able to trade XSP now. You can only trade options on XSP, but there you go. And it's pretty much the exact same thing as SPY. Okay. And there really isn't going to be a difference, like a noticeable difference in the options. Like, there's nothing that says, oh, you're trading American style options, or, oh, hey, these are European options. You just kind of need to know that with like the SPX index and XSP indexes, the mini index, those are European style and cannot be assigned until expiration. So we can take advantage of that by utilizing them and having just a little bit less. So European ETFs, I think that's the wrong thing to mention. we were talked about the difference between European style options and American style options. And the difference between the two is that American style options are able to be assigned early. So that means, hey, the expiration date is 3 days. I can be assigned right now, or someone can exercise that option right now. European style options have to wait until the day to expiration. That expiration day comes. Once that expiration day comes, then you can choose whether to exercise or to, do nothing and let that contract expire. Because we are in a declining market, we are entering a bear market. I recommended that we move away from SPY and trade the actual index. So either SPX for a larger account or XSP, which is the S&P 500 mini index and is about on par with the cost of SPY. So right now it's trading at 485.10 on the XSP index. And the reason why is because these are European style, and can help you limit can help you have a little bit less risk of early assignment or early exercising. Yeah, that's kind of the thought process and why we were mentioning European style versus American style options. Hope that helps. Any other questions? In relation or in regard to the $30 option account, we're still waiting for those funds to transfer. They're telling me that it could be April 10th that finishes and we get our funds back. That would be amazing. But right now we currently don't have access to them. And so we really have had to put a halt on the $30 options challenge. I've considered opening a new account and putting $30 in and just running that as the $30 options challenge. But I don't know. I just didn't really want to start over like that. So we are still going to wait and hold out, and hopefully the $30 options account finalizes its transfer from Robinhood to Tasty Trade, and we can pick it up where we left off. But yeah. Okay, we are 2 minutes away from our first candle closing on the 15-minute. Our first candle on the 15-minute is still signaling a downward trend. We can use that, and as long as we're trading below that 15-minute candle, we will continue to go long downward. Whereas if we're trading above it, we could potentially do a longer play. We also can consider the longer trend that shows that we're in this bear market right now, that we're in this downward trend below the SMAs. So don't forget that. People say the trend is your friend. Stay with the trend, things like that. Mind the trend, things like that. Basically, the thought process behind that is if you trade in the direction of the strongest move, you can have longer running trades, which can end up being more profitable if you use smart risk or stop losses and risk management. Do you think I could trade IWM instead of the other options you said, since they are much more expensive? Jay, you could trade IWM. Does Robinhood offer MRUT though? Because IWM and MRUT are going to be about the exact same thing. And I believe, let's see, is MRUT European style options? But basically, kind of like how SPY has the XSP, the Russell or IWM has the MRUT. It doesn't look like it doesn't look like you're able to trade that on Robinhood. So you might have to go with IWM. But basically, MRUT is the mini Russell. I know Tasty Trade does offer that. I don't know if Webull offers it. I think Webull does, but I'm not 100% sure. Let's see, MRUT. And you'll find that MRUT is close to IWM. I'm assuming IWM's trading around like 160 or so. Let's actually look. IWM is... That is not the right thing here. 180. So yeah, it's about a $20 difference. Oh, and we drop. Big drop there. It is now about a $30 difference. But we'll probably have seen that drop on the this index as well. Okay. MRUT, I believe, is a European style option that you could do that's not as expensive. For those who maybe want to trade the NASDAQ, you have the index, and then I believe it is doesn't look like Robinhood allows you to trade that. What is the mini? Is it MNQ or something like that? Let's see if Robin has that. MNQ. I've actually never looked these up on what is this? Let's see. NASDAQ index. It's NDX. There it is. Yes. I couldn't remember it. The NDX. Okay. So the NDX you could potentially trade. That's going to be the larger index. It's for the NASDAQ tech stocks. I think the opposite is the XND, which doesn't look like Robinhood allows you to trade and doesn't have it on their platform. I don't know. If you can still have high volume on XSP, I think that's just going to be the best one to trade, just due to the European style options and the fact that you don't have to worry about the early assignment. It's just super big beneficial. A beneficial part of the XSP. Do want to look at this though. Let's see how is volume doing here. We having problems with volume? Don't really know what's going on. Volume's not working, it looks like. I'm gonna refresh, and hopefully volume starts working again. Is it actually not possible to open a vertical credit call spread on XSP? No, it's definitely open. It's definitely... Yeah, you're definitely able to open a vertical credit call spread. Let me take you to XSP on OptionStrat and we'll take a look at it. Or we can even do this. Hang on. Let's take a look. Let's open this. All right. 490.39. If we go down, we're gonna hit, or just for the ease, we're gonna go with a 15 delta. All right. Well, 16 delta. So we would sell this one at 119 or 120, and then we would go up and we could pull this one right here, a 0.90. So 120.90, our difference would be whatever the difference in that is. 120.90, that'd be a $30 difference. So we'd have a $30 spread right there. You just have to go out farther on your strikes. You probably can't do one that's like a 509 and a 510. You'd probably have to do like a 509 or say a 510 and a 515, which would be a 5. This would be called a 5-point spread, because we're going 5 strikes away. So 1, 2, 3, 4, 5. And that 5-point spread is going to be 0.85 and 0.83. Not a huge difference. You also have to consider there's a ton of slippage. Slippage is basically the difference between the bid and the ask spread. Like, look at this. It goes from 0.25 all the way up to 90 to 63. I think I saw it flicker and have like $100. So these are going to be trading. So this is where it's going to be super, super important to skew the numbers in your favor. So say you start off with a 105 and a 150, you're going to want to make that credit spread as big as possible, right? You're going to want to say, oh, limit price of whatever, and try to get a better feel, because these are not going to give you a good feel by default. You're going to have to actually put in your limit orders on these. But you can do it and you'll be fine. Maybe SPX, if you can afford the SPX, it's going to be a lot more expensive. You could, technically you could trade the SPX with $1,000. You might not be able to do an Iron Condor with $1,000. Not a safe one, but I think you could do a safe a vertical spread. Let's see. Let's look for like a 15 or 20 delta. This right here is 20 delta right here. You would sell the 2310. You're actually going to want to open up this to show more strikes, to be honest, because on this, probably with $1,000 account, you probably shouldn't go more than a 5-point spread, which in this case, a 5-point spread, because these are increments of 5, is going to be right here. So there you go. You make what, $100? Yeah, $100, and I lost my train of thought. The 5-point spread, yep. I'm assuming your risk or your collateral is going to be around probably like $700 you have to have. What time is Trump supposed to speak today? I'm actually not sure. That's a good question. We can look it up. There's a couple different ways that you can keep track of this. You can do good old Google searches. You can ask ChatGPT. You can go to Wall Street Bets, which actually, I don't agree with their sentiment and stuff, but if you ever want to know what's happening, jump into this daily discussion thread, and there's going to be some rundowns of hey, there's CPI today, or hey, it's a Fed day. Fed meeting last week. EU journalists sound more coherent. Gap fill. Wow. Yeah, and it looks like it's going to be a theta day. Now would be a really good time to enter like 0 DTE expiration verticals, because right now premium's high from market open, and you can take advantage of theta crush for the 0 DTEs and 1 DTE. You can use Forex Factory for that information. Yes, there are so many different ways to do that. That's a good point. There's also, you can also go for instance, like if you want to know what the Fed or the FOMC meeting schedule, that's posted in advance. You can look at it on Google. Like I said, you can also go to the websites. I mean, it's very accessible. You just have to, do a quick search for it. Generally, if you ask ChatGPT, hey, what are some news events, or what are some CPI or FOMC days that I need to be aware of? Are any of them happening today? It'll pop back and be like, hey, these are the dates of it, and nothing's happening today, so you're good. That being said, one that nobody really talks about is 3 weeks after a FOMC meeting. There's generally an additional response to it once those meeting notes are released 3 weeks after that meeting. So just a thing to consider as well. Okay. Premiums are too high. If you really want to be safe, you could potentially do like 15 Delta Iron Condors today. Things like that. Just really, really, really far out. Super, super low profit, but super safe trades. Not really seeing anything here about news. Are we looking at a reversal soon? We had a slight reversal. Basically, all a reversal is when the downtrend transforms into an uptrend. As you can see right here, that happened around 8:45 today. Let's take a step back. I heard a phrase a long time ago that I really like, and it is, if in doubt, step out or back out. And basically what the point of that quote is if things look, if you're confused about what's going on in this micro level, step out a little bit, go to the weekly and look at the macro. Let's find a suitable time frame too. Maybe we have a slight reversal because of the deep sell-off, but I don't really see that we have a big reversal in trend. So if we do have a small reversal on the micro level, like this right here, like this small little, like we're already seeing it weakening up here. Like, I don't think it's going to be a long run up. Like, right now, the days of the long run-ups, we should just assume are not here anymore. We should just assume sideways theta days. Just really, really rough market right now. So, yeah, we'll have a slight reversal. We always do. But is it enough to try to put a trade against the trend? Probably not in this market. So, might be better to wait until you get like a peak. And then at this point, you do a like 15 to 20 delta call vertical call credit spread, or a bear call spread, I believe it's called. You get that higher premium, and then as it drops, you immediately make 10% profit on that, or even more. So, but in actual trend for like on the daily, no, we're not in a reversal anytime soon, I don't think. Not a strong one, at least. Like we've been a very strong downtrend since here, but it's been dangerous since about here and then here. So since March 25th, yeah, we've been very much in a downtrend. And you can see on this chart too, I don't know, let's see how far does this go back. This goes back to 2024 in July, and you can see that even though we've had dips up and down and stuff, we've been in a general upwards trend. You see this boom, and then it recorrects, and then it keeps going up, 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 up. This is our pivot point, and you can see that we've had a decline, and now it's going up and down, but it's still very much in this negative momentum decline. So not on the macro level, not yet. And I hate that, because I like to consider myself a realist, but I also like to consider myself a little bit of an optimist, so maybe like an optimistic realist. I want to hope for the best. I think the market goes up over time. But I also am not going to argue with charts and try to, say, oh, the market isn't that bad. Because look, already we've hit the top of the RSI, and we are on that downtrend on the micro level on the daily chart, 1 minute. So right here would be a great time to put in your vertical spreads. So like call credit spreads. You'll get more premium for them, and as the price falls and goes away from those positions, you will make money faster. So, and again, I cannot I cannot harp on this, or I cannot get on this soapbox enough, but in this type of market, we need to start backing our spreads away from the price. We have so much volatility, it's going to go up and down. We need to step way, way, way back, and we'll make less, but we'll be so much safer and we'll lose less, and so we'll keep more. But I can't recommend, but give me 1 second. I can't recommend, but at the same time, what I'm going to be doing is I'm not going to be taking probably over a 25 delta. I'm probably not going to take a trade over a 25 delta. That would be at 49.58 on the SPX. I wouldn't be taking a trade farther than like 50.80. So selling this one and then going out and buying that call. But backing it way up, probably on days when it's uncertain and back and forth, I might even be going out to like the 15 delta. On really, really high VIX days, which, I mean, we're at the most crazy high VIX days. It's at 49.16, so it's come down. It was at 53 earlier. Or 54 even it hit, apparently. But with that being the case, I might even back it out to like a 10 delta just to be safe. Because even if I'm only making like $50 that day, it's $50 that's pretty safe. And by pretty safe, it's more than 70%, 70 to 80% chance of profit. So I like those odds, especially in a bad downtrend of a market. And I might do some long calls and stuff too, but the safest things are going to be those little stepping back and letting theta work in your favor. All right, ladies and gentlemen, if you're just in now, please follow us. Please give us a thumbs up and subscribe. And you also might want to hop into the link there that's pinned in chat and join us in our Discord for open access to a lot of different investors. Strong community investors. We've got a lot of good people who are great at tracking the markets, great at predicting things. We do not recommend trades at all, but we will give you our opinion on them if you ask, and we will also share kind of what we're trading to. Be that as it may, you can follow, you can do whatever you want. We are not telling you to. We do not offer financial advice. We recommend that you reach out to a licensed financial advisor and follow their advice for your particular situation. because we do know that options are risky and can incur a lot of loss. So we do ask that everyone is very careful if they decide to trade these options. Also, freethetrade.com has a lot of helpful resources, screeners, technical indicators, and learning articles that will help you find your edge as a new investor or day trader. So definitely take a look there. Just kind of see what it has to offer. Okay, I apologize everyone, but I am getting a lot of messages and stuff. There is a emergency going on with one of our extended family members, and so just want to keep that, or just want to let you guys know that I'm not trying to be purposefully vague or anything like that. Just letting you know what's going on. So I may have to close the stream early, but we're keeping an eye on it. And yeah, if that happens, I will let you know, and then we'll sign off for the day. Okay. Yes. So any questions? Any questions? I know we've covered quite a bit. We covered the fact that the market is in a downward trend. We are entering what looks to be a bear market. We talked about the new strategy that I'm taking in order to make sure that I maintain profitability. Talked about making safe Fed plays like vertical spreads, vertical credit spreads, iron condors, and probably not doing the put credit spreads, just because in a downward trend market, those are probably not going to be as profitable, and they are going to be more dangerous. We talked about stepping out to farther deltas, like the 10 delta, 15 delta, 20 delta. Personally, I probably won't be trading anything closer than a 25 delta over the next while, just because I don't want to increase my risk or my chance to lose. So that's kind of my plan going forward for a little bit. The $30 options account should settle this week, so we should have access to that potentially by Thursday, just in time for our stream, hopefully. Other than that, tariffs, a downtrend, continue to monitor the market, and continue to trade. Do you think it's better for level 2 traders on Robinhood to not trade at all this week or during this downtrend? No. I think you can trade down. I think you can trade this week. You might want to do a cash account, and you might want to do puts, just because we have a strong downtrend. You could wait for an uptrend like this, potentially grab some short dated puts, hold them for 5 to 10 minutes and take your 5% profit and call it good. You're not going to want to wait for much. You're going to want to cut your profit in a lot on a bear market, just because the bear market isn't a strong downtrend. That's rare. I mean, we've seen it, but it's rare. This is more of a bear market here, where you have down, up, down, up, down, up, up, down, and it just back and forth. Looks like we're climbing into the green actually here. So we are now trading above the 15-minute candle here. If this candle closes completely and we start a third green candle up on the 15-minute, we are going to be seeing a bull run. Right now, you could actually probably hop in on this and catch a slight uptick. We just watched it jump $4 while I was sitting here talking. You could potentially grab that. It looks like we are having a strong buy. And what this is probably institutions and market makers, and they're probably trying to trigger put stop losses. There's a lot of people. Yeah, it's up $3 more now. They're hitting stop losses right now, and once those stop losses are gone, all of a sudden it's going to drop again. So you might wait until this green candle here changes. I was assuming something like this might happen, but I thought it was going to happen last Friday. It looks like it was going to happen today, though. And we're now up at 508. From 495 to 508 in 2 candles. So that's institutions. Let's look at the volume on this. And our volume is still not working, it looks like. Phooey. Oh, here it is. Volume. Okay. 1.62 million. 3.28 million. Don't tell me that's not coordinated. They probably just pushed through quite a bit of stop losses, to be honest. 509. At this point, I'm very curious to see if some type of news has dropped. Because if news has dropped, like Trump says, hey, we're not doing tariffs, we're just kidding. I do want to take a look because I want to see why that is. Because it could just be the market makers pushing it up, which I assumed they would. We are now in the green on the futures, but I want to see if there's something else. All of a sudden, literally everything just went green. I just watched it switch over. QQQ is actually flying up. SPX is headed up too. We're now at 513. We are at a volume of 1 million, 1.8, 3.28, 1.62. I would buy into this, honestly. I would buy a call. Let it trail for a little bit and then get out as volume starts to decrease. We might even be right on the fringe. We might be right at the end. So be careful about buying in right now, but yeah, this is a really strong move. We want to see how this plays out. If they've decided to stop buying in, we could see a good place to buy puts somewhere around here. I don't know. It's hard to say because that happened really quick. When it started, we called it around like 503, which would have been like right here, this first candle. So we would have had a good gains if we had bought in there, but let's just watch this candle, how it reacts. It went up to 517.43. That's insane. And we are going to see now if that is just a lower volume or if we're actually going to head down 2.28. Okay, so it looks like we are at a bit of an impasse here. Don't know that we're going to push much higher than this right now. We are trading at the 200 SMA. That's what we're bumping up against at the 517 level. And it looks like we've pushed through it. 518. Still a ton of volume coming in. What an absolute play. And what I assume what happened is a lot of people took out money, these hedge funds, these brokerages, and they're doing this on purpose. And this isn't a, hey, we're going to go up kind of thing. This is a, hey, we're going to make money and we're going to destroy all the puts. We're going to buy them back for super cheap. And then all of a sudden the market's going to crash and we're going to be holding the puts while you guys hold the calls. And they're going to do this switcheroo on some of the retail investors. So please don't get caught in that. It's a common strategy. We expected this on Friday. It didn't happen Friday. It's happening today. We're now at 520. And we are through the SMA 200. Super volatile markets. Volatile. Crazy stuff. Oh, and here comes the Discord. It's going to come alive. And market makers. Anyways, wow. So yeah, to answer your question, Jay, level 2 traders, short trades, directional trades, calls and puts, enter them and get out of them quick. We already are on our downward spiral from that push up. One thing we might be able to do is now you could enter your call credit spreads again, and at that 20 delta, you would probably be really safe. Where are we here? 513. A 20 delta on this might be like a 535. I do feel more directional about this one, so I could potentially go up to like a 25 delta. Get an extra couple dollars. Do like a $5 spread here. Anyways, guys, I am going to call the stream here. I've got too much going on. Too many calls and text stuff that are coming in. I do need to go. I appreciate you guys tuning in for this episode of Free the Trade. We will be hanging by, potentially be able to be reached via Discord, but just due to a situation that's going on right now, I do have to go. I appreciate you guys once again, and I hope you guys have a great rest of your day. We'll see you next time here on Free the Trade.